I think we should start. Tim's here. He's ready to go, right, Tim?
Sure.
Okay, so our presenter today is Tim Eliason from EG Tax, Esther Goulias Tax, and he is the owner and president of EG Health Connect. He also has 10 years of experience in tax preparation with EG Tax Services. He is a former small business owner for 20 years. The tax work he does includes preparation of personal, corporate, nonprofit, non-resident tax returns, and offering compromise. So there's some specialties there in case anybody's interested in anything as a specialty. He's the EG Tax Service Public Relations Manager. He's an NYSOH, so that stands for New York State of Health.
That's correct.
Office of Healthcare, Marketplace Navigator, and a licensed Medicare broker. So without further ado, I'm going to turn it over to Tim. I will ask everybody to mute while we're doing the presentation, if that's okay, just because
Sure.
if the dog starts barking or the kids start. I was muting myself. That tends to mess us up. So if everybody wants to mute, and then we'll have a chance for questions as we go through this. Right, Tim?
Sure. Yeah, we can pop them into the chat if anybody wants to interject on anything. And then obviously at the end, we'll go through things. Got a lot of things to cover, both business and changes in the tax landscape as we file 2020 and move forward to 2021. So hopefully there'll be a lot of good information for everybody.
All right, then without further ado, take it away, Tim.
Okay, now
Tim,
let's
you
see,
should be
Andrea.
able to share your screen. Try it.
Okay, I'm going to try to share this. Okay, everybody see that okay? All right, sounds good. Okay. All right, so obviously you guys are part of the Small Business Development Center that, Cindy and Andrea and Susan asked me to come speak on. And, I want to try to cover not only things about businesses, some of you are kind of established businesses, so hopefully some of the things I talk about help you. Some of you are establishing businesses, so, the setup and the proper things to do as you move forward, both in your business and tax filings. Hopefully those things will help you also, okay? All right, whoops, wrong screen. Okay, a little bit about myself. Did I advance okay? Because I can't see how to share it. Did it move to the next one okay? Somebody give me a thumbs up. There we go, perfect. All right, so Cindy kind of went through some of this. I've been with Esther in the tax industry for 10 years, running various offices, working with her at the corporate. I do obviously speaking engagements like this. I do some of the social media, website, worked on developing an app. So have a lot of background on some of that stuff too. Like I said, and as Cindy said that I do New York State of Health. I've done Medicare, do a lot of different tax returns. So I work out of our corporate office on Colvin Boulevard that we've been in. This will be our third tax season. And, we've expanded services. A lot of us that work year round, we do a lot of different things here. Besides what I do, we have Tiffany that does offer and compromise as her specialty. Chris works with a lot of people that are retiring or doing trust or estates. We have Maria that does bookkeeping and payroll. So, we're all wearing a bunch of different hats here. But all these things, as we say, is where the rubber meets the road, because when it's all said and done, even with the health insurance, it's part of your tax return. And I'll talk about a few things that, even outside the New York State of Health, where you as small businesses can benefit with the opportunities that are out there with the health insurance besides your business. All right, so we're going to kind of start out with you guys as kind of way that you're a business entity, okay? Starting out, most businesses will just start in a DBA setting, self-employed, doing business as, okay? You're a sole proprietor, in the state of New York, that would include an LLC or an LLP. This is where you're just kind of in the base of the business, okay? One thing I will say about LLCs, I want everybody to remember, an LLC is a state-based business, okay? LLCs are not recognized by the IRS as a business. That's why you're still on the Schedule C as a sole proprietor, self-employed. LLCs are kind of a local, I wouldn't say local, a state entity, okay? So, you know, LLCs, again, still gonna report it, personal tax return on your Schedule C, okay? As I talked about, you know, you guys are gonna use Schedule Cs as you're set up as a DBA. Basically what a Schedule C is, that is your tax return for your business within your personal return. I will talk about some other entity setups that you can do when we get a little bit later in the slide, but again, you know, that is where your income is calculated. And when we talk about income, most of the time on a Schedule C, we are talking about net income, okay? So that is our income, less our expenses that we're allowed to take or take against income, may include some inventory items, and then that is our net income, is what we get to calculate a lot of the tax and the self-employment tax and taxes that are on the tax return. That is where that number comes from, okay? All right, now, let me know if this is playing all right.
Howdy ho, neighbor. Hey, Wilson, do my taxes.
Andrew, you see that okay?
I can see. Can you turn the volume up?
How about that PPP law? Well, Tim, according to the wise tax lady, you need to go to the experts at EG Tax.
At EG Tax, our professionals are trained to make sure you receive the best tax refund. So don't ask your neighbor.
Howdy ho.
Okay, so just so you know, that gentleman peering over the fence, that is me. I am Wilson, as it has been noted from that. When that commercial broke out, people that know my wife, she was walking into clients and they said, "Are you married to Wilson?" And she was dumbfounded because I did not tell her I did this so that it would start to appear, and but it's part of our ad campaign. But the reason I picked this one too, besides that I'm in it, so I kind of had fun doing it, but is, you know, when you seek tax advice, just as Esther says, make sure, especially in the environment that we're in right now with the pandemic, people's, you know, personal things with, you know, distributions from retirement and unemployment that we're going to talk about, make sure. I mean, the SBA is a great, great tool for everybody because they have that team of professionals that can get you the answers that you need. You know, obviously we're in an environment where information comes to us fast and furious, whether we Google it or it's coming across our social media or whatever it may be. But, you know, basically what we're saying with this is, you know, seek that expert, you know, find that person, okay? All right, gross income, all right? Gross income is the income that we start with, okay? New this year, for those of you that have clients that are giving you non-employee compensation where you get a 1099. You used to get a 1099 miscellaneous, but now it's going to be called a 1099 NEC. This is a new document for 2020. What they did is they got rid of the 1099 miscellaneous and that non-employee compensation, thus the NEC, it'll be on a sole document, okay? So those of you that have clients that have paid you greater than $600, you will probably see a 1099 NEC, or if you have subcontractors or contractors that you paid, you will pay them on non-employee compensation on a 1099 NEC. So just make sure that you're doing that, okay? Income, gross income includes all sources. I know right now, again, with technology, a lot of you may be using a Square or a PayPal type thing. You'll get a 1099K as far as your gross income. The one thing I want everybody to remember, and the toughest thing to keep track of, is cash, okay? I'm always fascinated when I have a client sit across from me and that client will say to me, well, this is what I had, but you know, there was some under the table. And I back up my chair and look under my desk and I say, I don't see anything there, okay? Thus what I'm saying, you must report it all. If somebody says to me that they're paid under the table, you know, once that's disclosed, that is income, all right? And I urge you to do that because, you know, should something come up where you may or may not be audited in some shape or form, you know, if you can't account for income that you've put these expenses against, then, you know, it's going to be tough to prove with the IRS, and you're going to create a tax problem. So make sure that you include them all. Including all your income allows you to include all of your expenses. So that's the importance of once you do that. So again, gross income, and then now we're going to talk about expenses, okay? Tax liability, all right? This is a big one for people that are self-employed. And the reason I say that is basically what happens is your Schedule C becomes similar to your W-2 from your job. What I mean by that, once you've gotten your net income, you're paying your Social Security, your Medicare, and your federal and state income tax on your tax return based on your net profit. Okay? Hold on one second here. Got a question popping up. If I can get the chat to show up. It's not doing it for me. All right, with my share screen, I'm maybe not hosting. I don't see the chat. Cindy, can you help me out? What's in there?
Hang on one second.
I just shared the file. No questions.
Oh, okay. All right.
Okay.
Yeah, with it might be with me sharing the screen that way. Sometimes the chat I get to pop up. So if Cindy, if you can kind of monitor that, I'll keep an eye when I see the acknowledgement. Okay. So as I said, tax liability. This is where you pay. So you're paying your income tax, whatever your personal income tax rate is. And again, we're talking about Schedule Cs or self-employment, DBA, LLC type settings. You're going to pay self-employment tax of 15.3%. Okay, you do get, because employers get it, you get a credit as an adjustment to income of half of it. Okay, but the big thing is when I sit with clients that are starting businesses and they've got profits, you know, you're kind of used to when you had that W-2 job that they took that out as you went along. So as you were paid, they took the money out, set it aside with the government for you. Well, the thing with it, when you're self-employed, you have to have the discipline to do that yourself. So, you know, most of the time I will start with about 25%, maybe up to 30%, and make sure that people set that aside. And especially as they're starting out, of their net profits, what we think is their net profits, so that they're prepared to pay taxes, okay? So I want you to make sure that you realize that. Now, self-employment tax is only on your federal return. On the state return, you just pay normal income tax on the net profit. Oops. Okay, now, this is where when I sit with somebody, they always ask me, well, what should I keep track of, okay? When you're self-employed, as it says here, the whole world is your write-off. Okay, because most of the time, anything that you're doing is, if you're truly self-employed, you're acting as an ambassador or the president or the marketing director or whatever it may be of your business. So anytime you're conducting an action that relates to your business or generating income or promoting your business, you have a chance for a write-off. Now, obviously there are some limitations, but you know, we do approach it. And when I have people keep track of it, you know, this is where I say to them, hey, I'd much rather have you come in with overkill. I'd much rather say no than have us scrambling and looking for things to try to put against this tax bill that we did not anticipate. All right. Then my next question from anybody is, well, should I get QuickBooks? Well, starting out, unless you have a very strong accounting background, that consumes too much of your time. Okay, because you don't need to spend time starting a business trying to learn to be your bookkeeper. All right, I'd much rather see you invest 58 cents on the clearance rack after school supplies and buy a spiral notebook and keep the pages. And you can just stuff the receipts in there and I'll work with that, okay? I tell stories, and I've told it, I think, to this group before. I had a client one time that first time he came to me was a contractor. His briefcase was an Olive Garden takeout bag. Yes, it had a little oil stain and it smelled of garlic. All his receipts were in there, okay? So that was what he brought it in. So we sorted through them and I kind of taught him how to keep track of things. And I said, to make this work smoother so we can keep track of things, next year, I'd like you to make sure you sort them into these categories that we did today, all right? Next year comes around, Sure enough, he still got the same briefcase. I don't know if it's the same takeout bag from Olive Garden, but it still smelled of garlic. But inside were Ziploc baggies with Sharpie written on the outside with all the categories. Each one had receipts stuffed in it, okay? Now, granted, he stuffed them in there literally. So when I pulled them out, it looked like a big snowball, and I had to kind of sort them out that way, but we had them categorized. So what I'm saying is, we can figure out a system for you to keep track of your expenses. And again, I'd much rather have you come to me with overkill and things like that, but I want you to understand too how your categories of expenses can be used, okay? So we're gonna go through them. Advertising, obviously in this day and age, website, business cards, whatever it may be, okay? Auto expense, and again, this is a big one for most businesses, especially if you're in something that you're doing direct sales. Now, obviously, during 2020, mileage was not a big thing because you didn't do a lot of driving to go see clients. Everything was virtual, and we'll talk about that a little later. But anytime you do something, so if you're driving to the post office to mail a product and driving home, that is mileage for you, okay? If you're driving to Office Depot to pick up forms or letterhead or business cards or run copies of a sales flyer, that is a business expense. That is mileage, okay? And most time, keeping mileage is a much better, okay? During 2020, as you can see there, 57.5 cents a mile. I guarantee it does not cost you 57.5 cents to run your car every mile, okay? People can keep track of actual, but that becomes a lot more bookkeeping because we're talking about every gallon of gas, we're talking about our car insurance or registration, all these different things that we have that we would keep track of. And that gets to be pretty cumbersome in bookkeeping. I would guess probably at least 9.5 times out of 10, doing the mileage is always the best. Now, the first time we put a car, you know, as the IRS says, we put it in service for our business, we can look and see which one benefits us more. But once we establish for that car that we're using for business, then we have to stay with that, okay? Contract labor, again, talked about a 1099. You know, making sure that if you have somebody that's a subcontractor, if you pay them more than $600, you need to give them that 1099 NEC as a non-employment, okay? And again, subcontractors mean people that aren't employees. So if you have somebody that says, hey, I got a job on Wednesday, meet me at 123 Main Street and help me out. That's a subcontractor. If I say to somebody, I want you at the office Monday, Wednesday, Friday from 9 to noon, that is an employee because you have said to them, here is your schedule, whether there's work or not, okay? So be very careful with how you do subcontractors and how you do employees. You know, the big thing with employees is that the Department of Labor likes to just look for people to try to chase them down because they want them to do workers' comp. Okay. All right. Insurance. If you're carrying any special insurance, all right. Again, we're not talking about health insurance. I'm going to cover that a little bit later. But, you know, if you have to carry liability, errors and omissions, workers' comp, any type of insurance, those are things that you would have also. Interest. All right. So if you have a brick and mortar establishment and you have a mortgage on the building, then that would be something that you would have. You would have interest on that. Other interest, if you have a credit card that is in the business name that is solely used for business, then you need to make sure that the interest you pay on that would be an expense.
You know, I can carry the mortgage.
Okay.
Interest on my taxes. My name ain't on it, but I could.
Who do we have? I'm sorry.
I'm on this small business tax
Yeah.
joint and going over all the stuff we can curb.
Hey, could we please mute?
All right.
Yeah,
Okay.
we need to mute, and then if you want to ask a question, if you could put it up in the chats. And let's see. There's a couple of questions. Could we just, while we're kind of stopped, Tim, could we address the questions real quick?
Sure, fire away.
So, Monica, can you write off mileage as well as vehicle depreciation?
You cannot. Depreciation is included in the mileage.
Okay.
Okay.
And then Thaddeus, what about attending paid seminars, workshops related to your line of work? What percentage can you claim if we work from home?
Well, any type of thing you do that, anything that would be continuing education, certification, anything like that, if you're doing that, and again, the rules are a little bit different. You have a little bit more latitude with a self-employment setting. Anything that you're doing to better or grow your business, yes, that would be a deduction.
And the last question is from Sharon. Can you take mileage on a vehicle not associated with the business?
Yeah, when we're talking about, a mileage, even if it's a personal vehicle, I'm not necessarily saying that you bought a delivery van exclusively for business. Now, if you bought and you have a business where you do buy a vehicle that is exclusively used for business, then that's where the actual and depreciation stuff sometimes can become much more beneficial. But if we're talking about a personal vehicle, that's where I'll have my clients break down between their personal miles and their business miles, okay? And again, 2020 is not going to be indicative for most people because they just weren't doing it. Best example, anybody that does direct sales, we're talking about a Mary Kay, a 31, whatever, Tastefully Simple, where they have these house parties. People aren't doing that, obviously, so they don't have those miles to go in there, okay? All right, and then let's see here. Oh, we were on legal and professional fees, okay? I heard somebody mention something about a lawyer setting up their LLC. Those are legal fees that you can deduct. Somebody preparing your tax return. Those are, again, items that you can have that you can use to deduct on that. Rent or lease, okay? So again, if you're renting an area, a lot of times what I see with this is when I have somebody that's, best example is when I have somebody that is self-employed as, a hairdresser. They're renting their chair at a studio or a salon, or maybe somebody's renting partial space at an office building, okay? That can be deducted, all right? And again, we're not talking about home office. We're going to talk about that a little bit later, but this is something where you have an office space maybe outside of your home, and again, maybe you're paying rent on it or whatever it may be. Okay, depreciation, that's, a tough one. I just put the word up there because that's a word that scares a lot of people. Depreciation, really what it is when you have a capital investment, okay? I heard somebody saying they were going to be manufacturing swimsuits, okay? Well, if I have to buy a special sewing machine and a setup like that to make my swimsuits, that would be a capital asset that I could depreciate. And all depreciation is, it says, I made this investment of something that is going to last longer than a year, and I want to take, and it's like a pie. I'm going to cut up the pie, and I'm going to eat little pieces each year going forward. That's all depreciation is. It's a fancy word for saying, I have a big investment on an expense for an improvement of my business, and I'm going to cut it up and use it in future years, okay? And there's a lot of different things. I mean, I could do a whole class just on depreciation, but I want everybody to realize when you buy assets for your business, okay? Now, the tough one is data, okay? Computers, printers. A lot of times those, even though we want them to last longer than a year, they may become obsolete or maybe don't work or whatever it may be. So a lot of times we use what's called safe harbor. We take them as an expense in the year that they purchased. But again, when I'm talking about depreciation, what I do with my clients is that is a big expense that I want to match to revenue. So I may want to kick the can down the road and use it in the future a little bit, okay? Repairs and maintenance, kind of self-explanatory. Anything that we're doing, again, kind of went back to the sewing machine there. If there's something I have to do to repair my capital asset, that's where that would be. Now, repairs and maintenance on my vehicle, again, 57.5 cents a mile, that is where that's included. Now, if I'm doing an actual expense on my vehicle, that's handled a little bit differently, okay? Office expenses, supplies, pens, paper, forms, ink cartridges, those usable things that we use in the office. Supplies, this one we have to be careful with, okay? For somebody that actually has inventory, I'm not talking about your cost of goods sold. I'm not talking about the things that you bought, okay? That's a little bit different and it's handled differently. So, you know, that's where somebody maybe has inventory. You know, again, I'm using direct sales. Maybe they brought in inventory and they sell out of that inventory and then have some left over at the end of the year, okay? When I'm talking about supplies, it's different. Most of the time for my clients, when I talk to them about supplies, I'm talking about catalogs, maybe merchandise bags, anything else that they do that deals with their business, okay? Meals, all right? Now, for 2020, all right, you have to reduce the meals by 50%. So basically what this is saying is if you sit down at Tim Hortons with somebody to discuss business and you pay for it, the IRS has deemed that you must eat, so you can only take the other half. Now, 2021 and going forward, they've allowed this to be 100%. Okay, so this is going to be an important one for people with 2021 tax year going forward that you keep track of. Okay, so these are things. Now, notice it only sends meals. All right, full disclosure here. Okay, and I brought this up to Andrew ahead of time, but I'm going to use this as an example to interject. And just because I do this, and this is a little, you know, intercession, please don't turn me off, but I want to let everybody know that I am a Kansas City Chiefs fan, okay? I realize that that is the opponent, okay? Cindy's shaking her head at me, oh, that was a mistake. He's going to get turned off. Nobody's going to like him. However, I will state, and I've told my wife and my sons that are huge Bills fans, I am cheering for the Bills next week, okay? As I told them, I got mine. I waited 50 years. I started being a fan back when they won the first Super Bowl, and I won't tell you how old I was at that time, but it was 50 years ago, and I do remember it so that you can do the math on my age. But I am cheering for the Bills. I don't think there'd be anything greater for Western New York right now with things that have gone on than to have a parade for the Lombardi Trophy going through town. So I will be pulling for you, but full disclosure, I am a Chiefs fan at heart, but I am cheering for the Bills.
Well, thank goodness you cleared that up, Tim.
I know, I saw Cindy rolling her eyes at me as soon as I put my hat up there, so.
Yeah. So we've got just a couple of questions.
Sure.
Can we get to those real quick? One of them is about travel.
Okay.
So this is from Brittany. What about flight tickets for travel for the business? All the things that can be written off as a tax write-off. Do these items need to be charged on your business card only? Or can it be either a business credit card or a personal debit or credit card?
Okay, good question. And I just advanced the screen and travel's on there. Travel away from home, you know, where you take a flight, hotel, you went to a trade show or a continuing education or a seminar. Yes, that is deductible. Now, we're going to talk a little bit later where it comes up about EIN numbers. Do I need to get one? I tell my clients yes. And the sole reason is so that they can open a business bank account and have a card that is solely for the business. IRS likes to use this term. They do not want clients, or I should say businesses, to co-mingle funds. What that means is you have items on your personal bank statement that are for business, okay? So if I'm building birdhouses and I went to Home Depot and I bought all my supplies, but it was on my personal card, and the IRS comes back and says, I see this is out of your personal account. Are you sure this was really all for business? Because they will really question every business expense that is on a personal account. So that's why I say, and you were asking about the credit card, if it is possible for you to set up a separate account, separate credit cards, we talked about the interest, make sure you do that because that is very important to keep those expenses on.
We do have another question, and I'm just going to add a comment, if I could, to what Tim just said. Also, for those of you who are starting a business, a lot of times we have clients who want to put startup costs on a credit card. Perfectly understandable, because you run into things you haven't anticipated or whatever. But you get down the road a little ways and you want to refinance some of those startup costs, as they should be a lot of times. Unfortunately, the bank, if they're on a personal credit card, it's almost impossible to get a business loan for any of those expenses. So in addition to what Tim just pointed out from the tax perspective, you know, you really don't want to put business expenses if you don't have to on a personal credit card.
Yeah, and like I said, the IRS, just the commingling is just tough. All right, you
Yeah.
said you had a question, Cindy?
Yes, there is one more.
Okay.
This is from Sharon. We already have one vehicle registered for the business, but my vehicle is not. I do, however, travel for business and was wondering if I can also take mileage.
Oh, most definitely. Yeah, there's no reason, you know, I just used a vehicle kind of when I talked about it. But, you know, if you have more than one vehicle that you use, again, anytime you're conducting business and that travel and that mileage is for that, that is the case. You definitely want to do that.
Let's see. Will we get a link for the recording, and is there a handout?
Yep, as I said to Andrew when I came on, I will do a PDF of the slides and I will send that over to him. And I think, Andrea, I think I saw recording click up in the corner there. So I think
Right.
this is being recorded.
Yes,
Right.
it's being recorded.
So they will have access to that recording, correct, Andrea?
Yes, I will work with Karina after, and we will put it up, and then I can send you a link, and we can send it to everybody.
Okay.
Okay.
Great. From Thaddeus, what is the average percentage you pay yourself just starting out as a sole owner?
Well, again, you know, going back to what I talked about and making sure, and I'm going to talk here in a little bit about estimated taxes or quarterly taxes, but, you know, you can pay yourself what you want to, but you have to be careful because, like I said, when you get to the end of the year, that net profit is really taxed 3 times. It's taxed as federal income tax, state income tax, and it's also taxed as self-employment tax. So we could see yourself taxed, you know, 25 to 30% on your net profit, okay? Just because you pay yourself out of that does not mean you've lowered your net income because you still have to pay tax on that. There's no way to, in essence, hide income by paying yourself. So, you know, that, you know, paying yourself. Now, I'm going to talk a little bit later about adjusting your business entity as to what different business entities there are. And that's where possibly paying yourself and setting yourself up on payroll makes more sense.
Okay, we're going to do 2 more questions and then we're going to get back to your slides.
Okay.
Brittany wants to know what happens if you've already used your personal credit cards for business. You just need to keep your receipts, Brittany. That's correct. And we have a question here from Nia. How do you file loss if customers have canceled because of COVID?
Well, again, that's loss. You know, are you talking about losses through business? Yes, you know, that is a loss that you have for that. You know, that is obviously income that you don't have. You had expenses against it. It's much tougher because depending on what business you are in, you know, as to what, how the losses would be shown on the tax return, and they're pretty limited. You know, I think that's a lot of the case where, since it's difficult to say, well, I was going to make $40,000 self-employment, but everybody canceled all my business. Well, that's where the PPP and all the other stuff come in for people to get the loans to sustain business, because you just don't know. I mean, being self-employed is so different. Now, we might have a little bit of a different opportunity if you're signed a contract that you're guaranteed payment, and all of a sudden, because of some clause in the contract, that you're not going to get paid because the business was not done. That might be a little bit different. But when you're self-employed, it's much tougher to keep track of that, you know, as far as that, because, you know, even losses, you know, don't show up on the federal tax return anymore. You know, most of the time people thought of losses like fire or flood, things like that. But there was a way you used to be able to put some of those losses there. But, you know, I guess the biggest thing is making sure you're still keeping track of all your expenses, because if you're still conducting business, even though the revenue stream's not there, you can show a loss for the year. That's not a problem. All right, I'm going to continue on here, okay? Up on the screen there, I have utilities. When I talk about utilities, remember I mentioned earlier about renting a space. This is traditional utilities. If I have a separate business space, again, we'll talk about home office later, but if I have separate business space where I'm conducting trade or business, then I'm talking gas, water, electric at that, okay? We talked about travel, wages to employees. Again, if your business is such and you have the volume of business that you are paying people on a W-2, this is where you can deduct all those expenses. You know, your wages to them, your employment taxes that you're paying, maybe your workers' comp, you know, disability, whatever it is, that's all in there, okay? Taxes and license, you know, again, you know, most of the time here, we're not talking about sales tax because this is a pass-through. But if I have tax that I'm paying for certain things, or I have license that I have to do to be able to conduct business in the state or area that I'm in, you know, those are expenses that we can have there. We're not talking about federal and state income taxes that you paid on your net profits from the previous year. That is not deductible, okay? Cell phones and internet. Obviously, most of us can conduct business in the palm of our hand, okay? The cost of that cell phone, you know, your line or your whatever, your data plan or whatever you want to call it, same thing with internet. I will use that based on a percentage use for business, okay? And I will ask people, and I always love it when I got a couple sit next to me and the gentleman's self-employed and he goes, wow, I use my cell phone for 100% for business. I do absolutely nothing else on it. And I usually look at the wife and I says, boy, he doesn't call you at all or ever text you to say that he's coming home. You know, so again, 100% unless you have bought a cell phone and you're paying for a line that you're using as a business phone number. That's different. But most of the time we're using our personal phone and we're having a double duty. Same thing with the internet. You know, this is an expense now because you are at home, okay? So with your being at home, you have internet. Now, I will say this is probably creating some gray areas, some latitude, because there's a lot of people that have taken their internet and upgraded the speed of their internet because they are working from home and doing a business. So that would be something that we'd have to visit and say, was it truly necessary? Okay, so in order for you to operate, you increase the speed of your internet, maybe we have a little more latitude to write more of our internet expense off because of that, because the standard internet was not going to allow us to conduct business. Dues, again, example I used here, you know, real estate, MLS dues, things like that. Publications, you know, that's a tough one. Right now, when I think of publications, you know, nobody really subscribes to magazines that comes to their house, but you know, if you're subscribing to a software or a, you know, professional organization or things like that, those are things that are deductible. We talked about continuing education, gifts to customers, okay? You are allowed to deduct those, $25 per customer per year. So if you've ever wondered why your boss gives you a $25 Tim Hortons gift card, that's because that's what he can deduct, okay? If he gives you $30, he must really like you because he lost $5 in deduction, all right? But that's where there's 25. Equipment, again, I talked a little bit about that. Now, home office, all right? And obviously, we're in an environment, business-wise, that this is big. But home office is a home office, okay? I was laughing with my wife. I said, I can tell everybody's starting to work from home and setting up a business at home, because as I drive down our street, about every other house has a mattress and bed frame at the curb. So obviously they emptied a bedroom from some child that moved out and turned it into an office. It must have 4 walls. It must have a door. Obviously, if we're in a studio apartment or, you know, something like that that has just the 4 walls, you know, the area used for business, we'd have to kind of imagine our walls, if you will. But if it's a bedroom, it's a dining room, then it's a bedroom. It's a dining room. It's not a home office, okay? We cannot deduct home offices on the federal as a W-2 employee. So it's going to be very interesting for everybody that's had to work at home. That's not deductible on the federal any longer. You can still take it on the state. But again, home office means that you have a space that you're using it for, okay? Now, sometimes I have clients, obviously, that have inventory and things like that, that they maybe have a home office, also have a space in their basement that they're storing inventory or assembling their product or whatever. Same thing. You know, that is all rolled in. We can use that. Now, you can do 2 methods. You can do actual, where we take, you know, mortgage, property taxes, home insurance, utilities, everything it costs you to run your home, and then we take the percentage of the home square footage that you use for business and take as a deduction. The other one is kind of like you do with mileage. You get $5 per square foot, okay? But again, be very careful with this one. you know, this was one in the past that was abused, and that's where they went to the $5 a square foot. It's just like the mileage one. It used to be everybody always did all the gallons of gas and everything that they bought. IRS says, hey, looks like this is being abused. We're going to give a standard rate. Okay. One thing I will say about a home office, it is in the calculation after you do your net profit. Okay. If your net profit is negative, your home office cannot make it more negative. So home offices cannot add to your losses. They can only go against a profit. Okay, so make sure everybody remembers that. Okay.
We've got just one question on that slide, Tim, if we could do this real quick. So Monica wants to know, in regards to continuing education, can you deduct tuition for an employee that you are putting through school if the company is paying that tuition?
Yeah, there's you know, on a Schedule C, and then when I talk about the other entities, there's a thing basically called employee benefits. That's a high line item on the Schedule C. So yes, you know, whether, you know, instead of contributing to a retirement account for them, you are giving them tuition, that is an expense for you conducting business, definitely. Okay. All right. This is where I said I would talk just a little bit about health insurance stuff. If you are self-employed and you are paying for your health insurance, you can deduct your premiums as an adjustment to income, not an itemized deduction, or, you know, because that would be within your standard deduction for most of you. That's very high now. But if you are paying yourself, you're paying your health insurance, you can deduct that. Okay. It's not going to come off your net profit on your Schedule C. It's going to come off, you know, your gross income before you figure taxable income. So again, it's not affecting our self-employment tax, but it does lower our income tax. So that's a thing that we need to make sure we do. Okay. The insurance can cover the proprietor, his spouse, and his dependents. It can also cover a child of his age under 27, and even if the child is not his dependent. So again, when we're self-employed and we're paying health insurance, you know, if we work for somebody as a W-2 employee, what are they deducting? What they pay for our health insurance. So why wouldn't a self-employed person be able to deduct this? Okay. All right. And you got to be careful on this one too. You know, sometimes, you know, I have to look at it too and make sure I understand on a joint return where maybe one's a W-2 and another one's self-employed, you know, who's really carrying the insurance, you know, so we can't deduct what's coming out of the W-2 person's W-2 as an expense like that. It has to be paid from the business as part of the health insurance. Okay. There's a thing out there that we hooked up with a gentleman. It's kind of a little known tax loophole, and it's a thing called a health reimbursement arrangement, HRA. Okay. We're not talking about FSA, which is a flexible spending account. And we're not talking about a health savings account, okay, where somebody has a high deductible plan. This is a health reimbursement arrangement, okay? So if you are self-employed, you're paying the insurance premiums, okay? This is a way for you to deduct your out-of-pocket, non-reimbursed medical expenses, okay? So basically what I'm saying is a lot of people cannot deduct their medical expenses because of the threshold on the Schedule A and not being able to itemize. But if you set up this health reimbursement arrangement, you know, as you can see from the math that's done there, it's a little bit of something where, you know, most of the time when we've done this with individuals, they have saved, you know, $5,000 or $6,000 on the tax return. It is huge, okay? It's something that, you know, if you want to contact me, I have a little information sheet. I don't personally, even though I do a lot of health insurance, I don't do it. We have a third-party gentleman that does it. Actually, its birth came from Wisconsin. Farmers used to use this all the time to be able to do things, but they found that they could use the way that the IRS code is written, that people with small businesses. So it'd be something that you would be very, very interested in doing. Obviously, doing retirement is very important as well, okay? So conducting, you know, contributions to retirement. The nice thing about being self-employed, your thresholds or your amounts that you can put into retirement are much higher than if you were a W-2. Now, a W-2 can contribute up to $19,000 to their 401k. Then they could also do an extra, you know, $6,000 or $7,000 on the return, but not really get any bang for the buck. As a self-employed person, you know, you could do $20,000 or $25,000 of contribution to a retirement account and see an impact on your tax return. So again, self-employed people have an opportunity on their tax return to set aside for retirement. Estimated payments. All right, very, very important, okay? The IRS is kind of funny about things. They like to get paid timely, all right? What I mean by that, when you have a W-2, you're paying your tax and your self-employment tax or your Social Security Medicare timely because it's coming out of your pay and your employer puts it in quarterly. As a self-employed person, you are required to do this, all right? Basically, I have clients that I work with that I see them every 3 months. And I'm going to use an example of a couple that I have. A young lady, she actually does sign. You know, when you see somebody right now next to somebody speaking and they're doing the sign language form, that is her self-employment job. She got married, they bought a house. Well, the nice thing about it is she was very diligent about setting aside 30%. When she would come to see me, we'd figure out what her self-employment tax was. She would send it off and pay it. Then the leftover, she could use towards the house. So we knew exactly where she stood. So it's a great way when you're starting out with business to really budget. You know, somebody asked earlier about, you know, paying themselves. Well, if you can be disciplined and not, you know, try to just take money out of the business on a quarterly basis after we make sure that you've met your tax obligations, that's a great way to pay yourself, okay? Put a note down there about sales tax recapture. We cannot take sales tax as an expense only if we were unable to recapture it. What I mean by that, a lot of times with direct sales, the company that people buy the product from, they charge them sales tax and then they turn around and resell it. But if they just give it away or it becomes a loss, they never recaptured sales tax, okay? So they never collected from the end user, if you will. In that case, you know, you can take that as an expense. One thing I will say, make sure you do your homework if you're in a business that's going to have sales tax. The state of New York does not look very keenly on those individuals that are collecting money on their behalf and then not passing it along to them. The penalties for not collecting sales tax and paying it timely are pretty steep, all right? So make sure that you're doing that, all right? EIN number we touched on earlier. The one thing I will say about this, and I heard somebody when they mentioned that the LLC they were setting up. One thing I want to say about EIN numbers and LLCs and things like that, to set up a business, if you come see us at EG Tax, I think we charge $155. And the reason that we charge that is because that's what the state of New York will charge you to set it up. We're not going to charge you to set up an EIN number. We're not going to charge you to set up your business entity. We're not going to charge anything. LLCs are different because, like I said, you have to have a lawyer involved, and that can be thousands of dollars, okay? LLCs may not be, you know, critical in your business. Sometimes they are. But what I'm saying is be careful with the legal Zooms and accounting.coms. You know, the tools of the people at the SBA, I mean, you know, an EIN number takes us about 5 minutes to do. And at the end, we can print out the little piece of paper and you got your EIN number, all right? I've seen people use LegalZoom and accounting.com, waited months to get their EIN number in the mail. Makes no sense, okay? So always reach out to us if you got a question. And then the last thing, and then we'll see if Cindy's got some questions, but remember I said, starting out, you're a DBA, sole proprietor, okay? You can go up, if there's two of you into a partnership, we may do an LLC. We may even take you as far as a corporation. Now, just because you're by yourself as a sole proprietor doesn't mean that you can't be a corporation. You're just the sole shareholder, okay? If your income is getting in that neighborhood, $30,000, $40,000, $50,000 in net profit, we need to set you up as an S Corp, okay, or a C Corp, depending on where your income is. Because then we are having a way to cap your tax liability and get rid of the self-employment tax, Okay, that's where a lot of people, self-employed, get killed, is that extra 15.3. Nice thing about an S Corp, you're the board of directors. So if you go sit at Tim Hortons and you talk to yourself, does anybody know what that is? That's a board meeting, okay? All right, so there we can go, writing off 100%. Now people might look at you a little strange, especially if you hush them, saying, sorry, I'm having a board meeting, I can't talk right now. But again, you know, these are things that we can do, okay? All right, Cindy, you got some questions before I go through tax changes real quick? Whoops, Cindy, you're still muted for me there.
Sorry about that.
That's all right, go ahead.
Yeah, I've just got a couple. This is from Sharon, who has the construction company.
Okay,
And her question, what if you always pay sales tax on materials needed and the customer gives a capital improvement form?
again, unrecaptured. Okay, so if you're not able to pass that along as a business expense, you know, so, and again, when I work with clients, I'm asking them too, you know, okay, you bought this supply, you paid sales tax, okay? Are you putting those materials through at the full price, including the sales tax, or just like she said, the client saying, hey, no, I'm not paying sales tax on this stuff. That would be unrecaptured. That would be an expense on the sales tax.
So it's deductible.
Yep.
Can I ask a quick question on that?
Sure.
In my QuickBooks, whenever I put in, if I were to put in the material that I buy in QuickBooks and I put in the right way, the actual charge and then the sales tax I pay, when it comes time for me to pay my sales tax on my sales tax date, I run my report and it seems to take out all of the tax that I paid on my material off the amount that I'm paying my sales tax. And I was always wondering why that does that. Is that why? Because I paid it and then.
Yeah, and again, you know, sales tax, you know, you have to be very careful with, and you know, I defer most of my questions. Like I said, we have Maria here that does bookkeeping and sales tax reports and stuff like that. You know, using sales tax as an expense depends on who the end user is, okay? You know, so there are things within sales tax that because you're the end user, if you will, that, you know, you don't get to deduct those sales tax and things that you would as an expense. You know, usually then you're recapturing it when you bill the client. So you have to be careful with some of that. And QuickBooks, you know, again, I am not a QuickBooks person. Again, I defer that to Maria in our office because she and Ray, they understand the bookkeeping and the QuickBooks side of it. But yes, that is the thing that you have to make sure that you understand that, you know, depending on the end user and how you recapture it.
Okay, thank you.
Let's see. From Monica, are S and C Corps types of LLCs?
Well, you can be an LLC and become an S Corp. You do an election form, a 2553 on the federal and a CT6. So you can start out as an LLC and later do an election to become an S or a C Corp, okay? C Corps for a while were very in vogue, okay? Because they capped the income tax at 21%, okay? But now because of things with the new tax laws from 2018, S Corps become more beneficial because you can get your tax rate below that. So, you know, if I have an S Corp that maybe has made $10,000 that's coming to my personal return and my personal return tax rate is 12%, that's a much better tax rate for my profits for my S Corp. If I'm set up as a C Corp, it's going to be taxed at 21% no matter what my personal rate is. So again, when we have people and we're setting them up, we have to make sure that we understand what their net profits are and how that income comes over to their personal return.
Okay, and then we have one more question. This is from Elizabeth. As an events person, I hire others to work with me. What is the best way to include sales tax? Should I pass that on to the end user client, or am I the end user and pay that up front?
When, I guess I'm confused. Is this where you have employees that you're paying?
Elizabeth, can you help
Hi,
us?
yep, I'm jumping on. Hi, so I would work with vendors, so florists and, you know, all different types of people to make this event. And I would, you know, either hire them on and then put that in an invoice to the client, or is it best to pay them, you know, from either the client side or my side and put the sale and just pay for it up front, the sales tax? Or is it best to just do it all at once in one lump sum at the end?
I would, you know, that's an item where, you know, if you, basically you're talking that you're kind of subcontracting with other people to bring things
Yes,
together.
I guess that's it, yes.
Yep, and you know, and that's where, again, when you invoice them, I would make sure you're including the sales tax, so you're recapturing it, if you will. Because in essence, you know, you're the end user in that situation. So I would feel like you're the end user because you're buying the flowers, and if there's sales tax on that, you know, whatever your margins or pricing policy or whatever it is, you know, that's where you would make that part of the invoice to the customer that you're doing the party for. So, you know, I would do that. I don't know that I would open the can of worms, if you will, and show them that you're passing along sales tax to them. Because you know, and again, that's where you're in an industry. If you start putting sales tax on your invoices, they're going to be going, oh, wait a second. You're in a service type industry that doesn't collect sales tax. Why are you charging me sales tax? I would make much more that you're having that as a cost of your supplies or your subcontractors, and just, you know, roll it into what you bill them for those different things.
Thank you.
So that you're recapturing it, right? You know, because 8 3/4 or 8% Niagara, that's a lot of money to leave on the table if you're not going to recapture it.
One more question, and then we're going to move on to the tax law changes. This is from Alexandria. So you can only write off expenses against profit, correct? For example, if you have a loss for the year, you cannot write off the Tim Hortons board meeting, correct?
Well, again, you know, you can have a loss on your business, you know, just because you do not have sales or profit. You know, the IRS, there's a question on the Schedule C that says, did you materially participate in this business? If you did, and you have expenses, but yet you did not generate profits, you can show a loss. Now, after 3 years and you're still showing losses, the IRS might come to you and say, Tim, are you really trying, or has this just become a hobby? Okay. You know, so you have to justify that you are in business to make a profit. You know, another thing too is, you know, some of the things, and I heard we had a discussion earlier about the credit card. You can take up to $5,000 in startup expenses and do what's called amortization. So in my first year, maybe I had $5,000 of expenses, but I really had no profits. Well, I hate to leave that on the table. So maybe what I'll do is push some of it to next year or down the road to use it when my company starts generating. So some of the startup expenses, we can do that. And that's why, like Cindy mentioned, you know, having a way other than a credit card to keep track of these startup is really a good idea. Okay. All right, so I'm going to go through some tax changes pretty quick here because I got a few that pertain to you guys, but we've been talking about quite a bit when we've been doing different presentations. Standard deduction stays where it was at. It's gone up a little bit, but it has gone up a little bit, you know, for individuals and married filing joint. For most people, this means they just can't take property tax, mortgage interest, things like that, medical. So this is where the standard, and that's why I mentioned some of those opportunities when you're self-employed with medical and health insurance cost. Tax brackets, the thresholds edged up a little bit. Our rates, 10, 12, 22, 24, 32, etc. Those are still the same, but where those breakoffs are, those have gone up just a little bit. The one that's always the magical one for everybody, you know, if you're self-employed and you have a business that has a net profit of $40,000 or more and you're filing single by yourself, after $40,000 of taxable income, your income starts being taxed at 22% instead of 12%. So that's where tax planning becomes very important. Do we want to protect that money? Do we want to put some money in a retirement account? Do we want to buy some assets at the end of the year that we can depreciate to try to keep from our income and our profits being taxed at 22%? Okay. Economic stimulus, all right? I bet I answer 30 to 40 phone calls a day about stimulus. And contrary to popular belief, in this file cabinet to my right is not a file folder full of stimulus checks, okay? Tax preparers, we do not have your stimulus check, all right? Everybody seems to think and calls us and says, where's my money? How come I haven't got my stimulus? What did you guys do? Well, you know, we didn't do anything. You know, it's just the way the government disperses. Obviously, the IRS is in control of this, which, whether that's a good idea or not, that's to be argued. But the stimulus checks, obviously $1,200 for the first one, $600 for the second. On your 2020 tax return, there is it's called Worksheet 8. You will be able to reconcile whether or not you got your stimulus. And that does include newborns during 2020. I think I heard somebody mention that there was a child born somewhere along the line talking before. So if you haven't got the stimulus for that newborn, or maybe you had somebody that's going to be on your 2020 tax return that they haven't received the stimulus, so you will be able to get that on your tax return. Now, little disclosure here. Be very careful here, especially with the second stimulus. They are still dispersing it. So I mean, I have people coming in and I said, you know, have you had indication? And I will look up on the computer through the IRS website. You can look up and see, has that second stimulus been sent to them? May not have been direct deposit. Might have gone out as a paper check or one of those little prepaid cards. Because the last thing you want to do is do this wrong and delay your refund because you are handling this incorrectly, okay? Because, you know, in essence, you don't want to try to double dip, because I don't think the IRS is going to take kindly to you having a check in the mail and asking for it on your tax return for that second 600, okay? Now, I had a call yesterday. Somebody asked me, well, what about the third stimulus check? And I said, hadn't heard about that one. When is that coming out? Well, they said it's going to be coming out after the inauguration. And I said, well, then we'll have to wait and see if that comes out. It's not going to be part of the 2020 tax return. Just stimulus 1 and stimulus 2, okay? Charitable donations, again, remember I mentioned that higher standard deduction. For 2020, there's going to be a new line item that either any filing status, if you made charitable contributions, you get to take $300 off of your income. So that's something new. Then in 2021, if you're married filing joint, you can take $600. Obviously, when the standard deductions went much higher, a lot of times charitable organizations were seeing a hit. So this is kind of their answer to that. Itemized deductions. Again, job expenses at home are not deductible for a W-2 employee on the federal. You can deduct them on the state. And I'm sure everybody's going to come in and say, I bought a desk, I bought a chair, I did this, I did that, I made a home office, got a filing cabinet. That's great. And if it's not reimbursed, I cannot do anything on the federal. I can only take it on the state, okay? So home offices, for everybody that's had to work at home and set up a true home office, you know, it's a shame that they haven't made an adjustment to this, but they have not, okay? Child tax credit still remains the same. Now, child tax credit and the earned income credit. This is something new that they're doing for 2020, okay? So for all those people that were out of work on unemployment, which was very lucrative because of the extra federal money, and they were not working, most of the time their earned income credit and child tax credit was based on earned income. Unemployment is not earned income. So when we started doing the math, we're going, wow, there's going to be a lot of people taking a big hit because their child tax credit and their earned income credit is going to dip. Their income may be the same, but now half their income was unemployment and half was earned, okay? Well, what they're allowing us to do is we can take, in order to maintain the level from the previous year of their earned income and child tax credit, I can go back pull their earned income off their 19 tax return, put it on their 20 to calculate the credit, okay? We've done some scenarios which means that some people's refunds will go up even though they were on unemployment. So believe it or not, with doing this, there's going to be people that they're going to have an extra $2,000 or $3,000 of income in their pocket because of this, okay? All right. $500, again, that's going to stay there. Same thing on this credit. We can use 219 numbers. Talked about the earned income credit. The maximum, you can get is $66.60. And again, a lot of people were not going to see this because they were on unemployment for most of the year, but now I can go get that by using their 19 tax numbers. Kitty tax, all right. They need to change the name on this, and they should call it ball and chain or cannonball or whatever. Reason I'm saying that is because if you have a college-age student that was working at Tim Hortons in the summer and they got laid off or furloughed because of the pandemic, they made a pretty darn good living on unemployment. They may have got the state minimum of $182, plus they got $600 from the federal for 18 weeks. That's a pretty good summer job without having to work. However, because of that, they are having unearned income above above $2,200. They are subject to the kitty tax. So if you're claiming that college student as a dependent on your return, what happens is if they have unearned income over $2,200, it's not taxed at their personal tax rate, which may be less than 10%. It's going to be taxed at mom and dad's tax rate, which might be 22%. All right? So what we're finding is we are telling everybody, when you do your tax return, bring your dependents with you. Bring your college students with you. Because in some cases, in order to prevent this kitty tax, we're going to go ahead and have to push the college student off the return and forego the education credit, because that credit is less beneficial than saving on the kitty tax. Because we have sometimes, and when the slides go out, there's a example in here that you can take a look at, but a college child could have received almost $18,000 in unemployment, okay? And if that was mom and dad's rate, they'd be taxed at 22% on that. Not 10%, which would be their normal tax rate. It would get hit at mom's or dad's rate, okay? So again, you got college students, you need to make sure you do the math to see which is most beneficial, okay? And like I said, there's the example there. And taking the child off, we found that this example was a savings of $3,000 in taxes to the household. Now, if because you do that, you send your college student off on their own and they get this big refund, don't think they're going to run and hide with it. Write this form number down, form 8888, okay? That is a form when you file a tax return where you can split a refund into 2 accounts, all right? So basically what I'm saying is you can say to them, that's great, you save the money, the household money, but we're gonna split the refund. So you don't have to figure out how you're gonna get it out of that teenager's hands, and they probably spend it before you can even get to it. You can go ahead and split that. So anytime you do a tax return form 8888, you can split the refund into multiple accounts. Sometimes we have people do that where they put it between their checking and their savings. So, okay. Flexible spending accounts. This is new for 2020. Best example I have, Geico. People that have worked for Geico have a great dependent care program. They get money from Geico to pay for their child care. Well, what has happened? They're working from home. Child care was closed. So they have this extra money that is in their flexible spending account for child care. Well, what they're doing, they're allowing you to roll that over so it's not taxed income, okay? So if you had money that was coming from an employer for child care on a flexible spending account and you didn't use it because you're sitting at home with the kids because they're not in school or not at the child care, then you can roll that over. IRA contributions, some of the things were changed there. Age restriction for those, now there is no age restriction. So if you're still working and you're 76 years old, you can still contribute to an IRA, okay? This is a big one, all right? IRA and pension distributions. for 2020, if somebody was impacted by COVID, they could withdraw up to $100,000 penalty-free. Some people have been asking, oh, I can take money out tax-free. No, they're going to tax you. The penalty is for early withdrawal. Say you're under 59 and a half and you took some money out to pay your mortgage. You don't have to pay the penalty. It's still taxable. However, as the next point says, I can pay the tax on that over the next 3 years. So instead of getting hit all in 1 year, I can hit it over the next 3 years. Or I can say that I took a distribution from my 401k, repay it over the next 3 years, and then it's not taxed, okay? So there are some options for people that have taken money out of a 401k in 2020, all right? So that's a big one on that. RMDs are 72 now, they're not 70 and a half. One thing that has changed with IRAs, say that you inherit an IRA from a parent, okay? There's some things there about the age difference. You know, it used to be that you could take it over a lifetime. Now, if you're, you know, the age difference is a certain time frame, you have to have it all distributed within 10 years, okay? Obviously, what that means is the IRS wants its tax on the money. They don't want you to sit on it, so, okay? This is a good one, all right? Remember that President Trump talked about the payroll tax holiday, where you didn't have to pay in on your Social Security tax, and that would put more money, part of the stimulus. Well, if you're self-employed, you can actually, on your tax return, take 6.2% of your net income and kick it to 2021 or 2022. So $10,000 in net profits, I'm paying that 15.3 self-employment tax, okay? I can take 6.2% of that and say, you know what? I'm not going to pay tax on that this year. I'm going to pay next year when my business is back and strong, okay? This is something you got to think about, because just like when we started out with the PPP, what were they first? Loans that you're going to have to repay. Then what did they do? They passed legislation. They said, you know what? We're going to forgive some of it. You don't have to pay it back if you don't want to. You know, same thing with this. It could be that this would be something that down the road to keep, you know, the small businesses going, they might say, you know what? You don't have to pay that 6.2% back. Just keep it, okay? So again, tax strategy, thinking about things, okay? Some of those are the new tax forms that I talked about, okay? That 8915E, that's the one that you have to file if you're doing the whole, you know, breaking up over 3 years and different things like that to make sure that you're not paying tax on that, okay? 529s, want to remind everybody this changed back in 18. It's not just for college. So that New York 529, you can also use it to pay K through 12 tuition, or you can now use it to repay student loans. So if you got leftover money in a 529 and you can change the beneficiary to somebody that has a student loan, you can use it to pay your student loans and deduct that money. We do have an app. This will be on the slides. If you have a phone with the camera, you can just take a picture of the QR code, either Android or Apple. It has a mileage tracker. You can take pictures of receipts. There's a link to social media. There's a link to our client portal to upload documents or letters, whatever that may be. All right. That's what I got. All right. So if Cindy, you got some questions?
Well, I have a question. So for people who got money from either EIDL or PPP, and that money is paying, let's just say they got EIDL money, they got the $10,000 advance that's basically the forgivable loan.
Yep.
And they say they paid $10,000 worth of rent expense with that money. They, on their, and this was for a business, obviously, then they can't deduct the rent expense that they paid with the EIDL money, right?
Exactly. Exactly.
Okay.
Yep. That would be, you know, that would be, I would get a silver ice cream scoop and engrave their name on it, because that would be called double dipping. Okay. All right. Because if you think about it, that is not your money. okay? You know, and again, you know, whenever we talk about W-2 employees, unreimbursed business expenses, you know, we're talking unreimbursed. That's a reimbursed business expense. You got paid by somebody else, not yourself.
But that would hold true for either idle or PPP money. So they're going to have to be careful about that when they're looking at what their deductions actually are. Like you might think that your rent was all deductible, say your rent was $25,000 for the whole year, but if you had used $10,000 in either idle or PPP money, then you'd only have a $15,000 deduction.
Yeah, and again, you know, I encourage everybody to bring that through because, you know, this is an evolving process. Obviously, you know, some of the stuff we're still picking up a couple things. You know, I don't know how somebody read 6,000 pages and then voted on it and passed it. I mean, I can't read that fast. When I actually stacked up reams of paper, that's a case of paper plus 2 reams, that's 6,000. I'm looking at it going, there's not a chance. I mean, there's no way you could read that in 6 hours. But, you know, obviously there's things in there and some of that is some of the stimulus. And like I said, what we're finding with this is that, you know, on the outset, you know, this was all loans and stuff like that, but a lot of forgiveness going on with this, so.
So, and another question I have is this. If you were filing a tax return for me and, you know, and let's just say, let's talk about it from the point of view whether it's for a business, but I could have a Schedule C as a sole proprietor or LLC, or I could have, you know, either partnership or corporate tax return. If I had gotten PPP money, would you need to see the paperwork from the bank about what was going to be forgiven out of that PPP money? What was
Yes,
forgiven?
most definitely. We're telling our clients to make sure they bring that in. We help people compile the paperwork. Obviously, we were not a conduit for everybody to be able to do it. That was the banks. I know, what was it, last Tuesday, I think, the banks opened up again to do the second PPP money, where they were starting to accept applications. So the second one is out there. But yeah, we're encouraging all of our clients with businesses, they need to bring that in because we need to make sure that we understand the flow of cash, where it was coming in and where it was going out.
Right, because we have some clients that have already started filing for the forgiveness through the banks. You know, that's the bank's paperwork, as you pointed out, you know, that got PPP money. And I would imagine that would be an important document to have in terms of trying to get your taxes done appropriately.
Exactly. And again, you know, I defer when I do this. Chris and Maria do a lot more of the corporate things. I have corporate clients that I do, you know, just as they come to me when they have somebody with a medical thing, you know, as we all do here, you know, besides Esther. I mean, Esther digests all this and regurgitates it faster than I can believe. But, you know, we all, you know, always a second set of eyes saying, hey, you know, you've been dealing with this with clients and stuff like this. Is this where we're at? And, you know, that's why we have the team that we do here.
But it doesn't matter what their business structure is, whether they're filing corporate or Schedule C, they still need that paperwork that shows.
It's very important paperwork, yes. And maintaining that paperwork, because like I said, you know, as things evolve with the whole stimulus packages, you know, and like I said, you know, it sounds like there's a third one on the way. You know, some of those things, you know, that they said that you have to repay or a loan or showed up somewhere on a tax return might be forgiven, and we might be amending people's 2020s. So, okay. All right. Any other questions in there, Cindy?
I don't have any in the chat, but I mean, if folks want to unmute, if they have questions, that's fine too.
Sure.
At this
I'm
point.
going to stop the share here. Okay. All right. Anybody else? We got everybody up here. Any questions anybody has?
Thank you again. I really appreciate your presentation. I learned a lot from it. I am, you know, going into my business very slowly. Could you tell me, as I start to create income for myself, when does it go from hobby to actual business? Like, it's, you know, I have that one client who's paying an amount of tax that I need to then report. Is that when, you know, it's not just me doing a friend's party, you know, here and there, and, you know, buying a couple of things for the party, but it's an actual paying client? I would think that that would be the time that I would need to do the huge transition of, you know, getting an EIN and doing an official transfer from hobby to business.
Well, and again, but what we're looking for is, when we decide where your business is in its stage, it tells us how we handle it on your tax return. Because if you're generating income on what you classified as a hobby, you still need to report it.
Yeah.
So it still shows up on your personal income tax return.
Mhm.
However, it shows up only as income on the federal. You can't take any expenses against it. Okay, so if you've started a business and you got a concept and you're acting as a business, and again, I use that term materially participating, then I would like to see you put it on a Schedule C. We don't have to have an EIN number, okay? That's not mandatory to file. I would much rather, because then your income, you can put expenses against it. Granted, startup, we talked about that. You could show a loss. It may help your tax situation. After 3 years, if we're still showing a loss because we're just doing a few friends here and there, yes, it's a hobby. But according to the IRS, then we put it in a different spot. We are taxed on the income, no self-employment tax, taxed on the income, cannot take expenses against it. Okay? So again, both of them show up on a tax return, but if you are operating as a business and you're participating in it and that's the way you're acting, I'd much rather see you do that Schedule C so that we can, maybe minimize your tax liability of a lucrative hobby, I should say.
Mhm. Thank you.
Yep.
I have a question on the PPP loan, the forgiveness amount. If, how many weeks? Is it like 8 weeks, or is it the 24 weeks of the payroll that you can use towards the forgiveness amount? It's coming through a little confusing, because first they said the 8 weeks following when you got the money, and then they threw in 24 weeks, and I don't know where it stands as how many weeks you can use. Is it any weeks, like this quarter, that quarter? What is the forgiveness amount that's being considered?
I'm going to have to defer to anybody from SBA because, like I said, I did not really, we had some other people in the office that were dealing with those, that were working with clients and compiling the information to do them for the bank. So, I understand their concept and things like that, but I did not do any. I don't know if Cindy, you have, any insight on that?
I think Andrea is our resident expert on that. Andrea, do you want to jump in?
I'm not a resident expert. I thought, and I could be wrong, but I thought it was what you elected if you took your first PPP. Originally, it was 8 weeks. That's all they would give you. Then they changed it and said you can elect 24 weeks. So it's what you elected to spend the money in, if you're talking about the first PPP.
Yes, I received the first PPP and they didn't ask me nothing. They just gave me the money. They didn't tell me, are you picking this week, or they just told me it would be 8 weeks. And then they changed it to 24. And I'm just not too sure what we
So
can
from
use.
the day you got the PPP money, you had 24 weeks to spend it. Am I
Okay.
correct, Michael? You could jump in am I right? From the day you got the money, it's 24 weeks out that you had to spend it in.
Yeah, because in the second one, you have to have it used by, is it sometime in May or March?
No, the second one, once again, it's 8 to 24 weeks.
Okay.
But it's based on so you have to pick a quarter in 2019 and the same quarter in 20, and it's based on being 25% down in business in order to get the money. And then once you receive the money, once again, you elect to spend that money in 8 weeks, or you elect to spend all of that money in 24 weeks.
Okay.
We
So
can't hear you, Michael. Nope. So that's my understanding. Am I that sort of what you understand about it, Cindy?
Yeah. I mean,
So
So,
the article I have here, you're right on that PPP borrowers can choose between 8-week or 24-week covered period, they call it, in which to spend PP loan proceeds, of which up to 40% can be used on such business expenses as interest on mortgage, rent, expanded costs, property damage, supply costs, protective equipment. So yeah, so it is, you're right with that time frame.
okay, so it's actually the time frame then, you don't have to compare it to 2019? Because the problem I'm having is that because in 2019, we were closed, our business was pretty much closed down half the year. My husband had cancer, so we had to close down our business. So we did very poorly in 2019. 2020 is when we got the loan, and we actually,
Office for the other office to call the IRS. Somebody grab my Park 3.
hello,
Go
can you
ahead.
hear me?
Yep, go ahead.
Oh, okay, I'm sorry. And then in 2020, when I received the loan, our business, we're in the construction field and we were building a home at the time, but we didn't really slow up. And we did we did a lot of business in 2020. So we just blew away 2019. And I'm concerned that if they're comparing 2019 to 2020 under our circumstances, that ain't gonna work.
That you're gonna have to discuss with your bank.
Okay.
Yeah.
Okay.
Yeah, because with the, that's one of those things that they, they're always looking back to compare business, and it has to be 25% lower than it was the previous same period of time and things like that. But that really, the banks have all the nuances on that as far as the application process.
Okay.
One thing I want to interject to, some of the things that I talked about, with the retirements and some of the stuff like that, I talked a lot about it on the federal. New York did come out about a week and a half ago, and they finally did say that they're going to follow the same rules as the federal. Sometimes what happens between the IRS and New York, they do different rules. Like I mentioned about home office, you cannot do it on the federal, but you can do it on the state. In the case of all the different things, when it talks about 3-year repayments, stuff like that, that is going to be handled the same way on New York. So basically what I'm saying is if somebody took out $50,000 and on the federal, they're electing to cut up the tax for 3 years, you can do the same thing on the state. It's not going to be that the state is going to charge you full boat on the $50,000. Okay, so whatever you do on the federal with your election, you can also do on the state. It's not different rules like we sometimes see. Oh, and one other thing I forgot to mention too. It was announced last Friday that the IRS will not begin processing tax returns until February 12th. Okay, I did 4 or 5 returns yesterday. I got several this afternoon. So I can prepare the returns. I can send them as an electronic file through our software. However, they will not go to the IRS and be processed until February 12th. Okay. What that does delay is anybody that has earned income credit or the additional child tax credit. It used to be that, second, third week of February where they would see their refunds. Now that's going to be pushed back to the beginning of March. Okay. So it's just pushing some things back. Really what it boils down to is there was a delay because of, the IRS having to get all the stimuluses out so that we could reconcile them on the return. I didn't know how they were going to do it personally. They said, oh, we'll have it all out by January 15th and then you can start filing returns. And I'm like, yeah, good luck. So, but basically February 12th, returns will begin to be processed. If you do, we do your return, we'll have it there ready to, when the door cracks open, to go in. Then that's when the 21 days starts for the federal and then whatever the timetable may be for the state. Okay. All right. Anybody else, any other questions?
Nope.
All right. Well, let's all give Tim a round of applause. Yay,
Thank
Tim.
you very much. Thank you.
Great job. Thank you.
Thank you, Mr. Tim.
You're welcome.
Thank
So
you.
if
Andrea, you need
you have
to
questions and you
tell
want
everybody
to,
anything?
Oh, Mr. Tim, I do have a quick question really fast. So it's just about filing taxes. I know that you have to file every quarter. So say, for example, one quarter you only get like a customer. Do you still file? You still have to file taxes?
Well, and again, that's where, I encourage with my clients that I meet with, and the thing is, I'm not charging. We don't do billable hours. So when I sit down with my clients on a quarterly basis, what I'm doing is I want to help them manage their cash flow. So if you don't have the business that makes you have to pay it quarterly, hey, I'm going to keep the money in your pocket. I'm sure you're a much better steward of the money than our state and federal government. So you probably know a better way to spend it than they do. Okay, so if I can keep it in your pocket that quarter because your business was a little lean, I'm definitely going to do that.
Okay, got it. Thank you. It was so informative.
But Brittany, if it's sales tax you're talking about, you would have to file quarterly, correct, Tim?
Don't mess with them. They're a mean batch. I hope nobody here worked for this New York State sales tax, but that's a mean batch of guys. They put the mean ones there at the sales tax place. So
So is a difference between like the sales tax and then like your gross that you make or something like the profit that you're getting in from it?
And for a lot of people too, if you have very limited sales tax, you can, solicit to sales tax to file on an annual basis instead of having to do quarterly. So if you're not a real high volume sales tax business, but you have some occasionally, I would make sure that, you maybe do an annual thing so that you can only have to worry about it once a year. Because again, if you file late, even if you have no sales tax and you forget to file, the state still likes to charge you $50. So.
But it is correct that you have to file quarterly your first year in business, right? Because they don't know you're at the threshold until after that.
So that would definitely be me. This is my month.
Yep.
Yeah, so Brittany, if it's your first year, even like Tim was saying, if you have zero sales tax, if it's your first year, you still have to file the return and say no sales tax due. Or zeros on it or something, right, Tim?
That's what I need to do.
That's correct, because otherwise, like I said, if it's late with all zeros on it, they're still going to charge you $50.
Good gracious. Okay. All right, got it. I will do that.
If I could just add, everybody will get an email with an evaluation. Could you please fill out the evaluation and send it back to us? That would be great.
Of course. No problem.
All right. Well, I want to thank everybody for attending today. And once again, Tim, thank you so much. And EG Tax, we appreciate you guys doing this for us. So
no problem. And like I said there, I'm here year round. This office is open year round. Some of you guys are, obviously we're in a setting. I have, as I refer to it here, is my hockey penalty box with my plexiglass surrounding me. But, we're here too. And, Esther wants us to be able to help businesses just like she was 30 years ago when she started this. So consultation, sitting down, as a sounding board, we're doing billable hours. If we have to file a return or something like that, yes, we're going to charge you to file it. But, just to be, just like the SBA, just to be that organization that you got to bounce things off of, that's what we're here for.
Okay. Mr. Tim, what's your phone number?
The phone number here is 716 632 7886.
7886. Okay.
And I'm extension 1016.
1016.
I put that on the first page of the PowerPoint.
Thank you.
And we will be sending out the PowerPoints, correct, Tim?
That's correct. Yep. I'm going to print that to PDF. I'll put it on there so that, you'll have that too. It's got all those slides and stuff like that too that I covered today.
Okay.
Great. Wonderful. All right. Well, thanks again, everybody. And I wish everybody